In this video, I'm going to be selling a covered call contract on my 100 shares of AMD. Let's get into it. Okay, so we're going to go to AMD. Now, they just reported earnings. The earnings were good, but the guidance wasn't amazing. It didn't make me feel like so enthused, like crazy. Bullish, bullish, bullish. I mean, I am very bullish on AMD, but I don't really anticipate something short term to happen like too crazy. I feel like a lot of things were priced in for AMD for their earnings. I felt like things were just priced in and they just barely kind of beat. So I didn't feel like, wow, they just blew it all out of the water, you know? So and I'm trying to get into this frame of mind where I'm not married to a stock. I feel like sometimes I get to the point where I'm like, I love the stocks that I pick so much. Sometimes it can be like, I'm married to it no matter what. But, you know, I think for me to be an effective options trader, I want to be able to let go of shares if I had to. Now, I really don't want to actually let go of AMD this year, kind of like for my own personal like tax reasons. I would like to sell it sometime in 2027, but I'm gonna make kind of a calculated decision, I guess, to sell a covered call now. Still give me a lot of upside. Um, Basically, the stock would have to basically get to all-time highs for me to have to like let go of the shares and then some. So we'll see what happens. We're going to take that calculator risk. Going to show you what I'm doing. Okay, let's get into it. So AMD, let's see here. So the current price, 492. Now, what I'm going to do before is I'm going to check something on Robinhood Legend. It's called level 2 options data or level 2 data. Not options data, stock data. Level 2 data. That's it. Basically, this tool lets you see where the limit orders are, where people are, buying, selling. So the bigger this candle, the more on the green side, the more people are buying, and the bigger the red candle, the more people are selling. So there's a lot of resistance here at 500. A lot of people want to sell there, right? A lot of people want to buy here for 460. Let's see here. Yeah, 450. That's a big one. Nice even number. Now you'll see here the biggest candle there is at $600. $600. Oh, my camera went dark. There we go. $600. Okay. Now that's for multiple reasons. Basically, at $600 a share, that's when Meta is, I believe, warranted up to 10% of the company. Same with OpenAI. So that's going to dilute shareholders like 20%. So that's a big, big, big resistance right there. So that's a big reason. 600 is a good number in my head to sell a covered call right around that area. It doesn't have to be exactly there, but there is a lot of that resistance right there, right at 600. It's also a few decent sized candles like at 560, 540. So that's a good piece of information. Another piece of information. Oh, my camera keeps going dark. There we go. Another good piece of information is the Bollinger Band. So here we have a 6-month Bollinger Band on AMD. 573 is kind of that top range, and right here for at the current price of 491, we're right around that middle Bollinger Band, and the RSI is about 48, so we're right in the middle of that, that buying volume, and yeah, so not too bad, kind of in the middle, not like the perfect ideal situation to like very clear, like higher RSI, high Bollinger Band, then sell covered call. Like it's not a perfect setup, but you don't need to be perfect to make money in this market. Okay, so what we're going to do is we're going to go to sell call. And, oh, sorry. Wait, where are we? Okay, AMD. Stop. We'll go to trade AMD options. Now, for those of you who don't know what a covered call is, a covered call is an options contract. You're making an agreement. You're making an agreement with the person buying the call option. Now, the person buying the call option has has the right to basically buy the shares from you at that price, right? They don't have the obligation; they just have the right to, right? They can basically they pay a premium. They then have the right to take the shares away from you from that strike price, right? At that strike price. Now, the option seller is basically putting up 100 shares of collateral, right? I already own the shares, and I'm agreeing to sell the shares at that strike price. Okay. So the reason I'm doing that is because I'm getting paid a premium up front. Okay. So basically, they are putting a small amount of money to leverage control over 100 shares of the stock. And what I'm doing is I'm getting paid a relatively small amount of money. It's good money for me, but relatively small. Uh, and I'm agreeing to let go of the shares at that price, right? So sell call. I want to make sure I give this enough time. I'm thinking let's just check out August 21st. The reason I'm checking that out is because it's the third Friday of the month. And that is not a lot of time from today, but that third Friday of the month is the traditional options expiration, and there's a lot of volume on that day usually. That's the day with the highest volume in the month usually. So now you'll see here, if I were to do only 15 days out, that's only 2 weeks, I can only go so high on the strike price before the premium starts getting so little to where it might not be worth it. Let's check out this 580 strike. I would get paid about $500. That's about 1% ish on the current price. Now, as an option seller, we get paid from the theta, which is the time decay of the options contract. That's why most people lose money buying options, is because of that theta decay, time decay, right? They need to not only be right on the stock going up a lot, right, when they buy an out of the money call option, but it has to be right by a certain date. And it's very, very stressful on their end. So let's see here. We're going to add more time. Let's take a look at September 18th. That's 43 days out. I don't usually like to sell that far out on calls, but you know what? Yeah. Um, that's pretty good. So if I set the strike to about 580, remember that 550 price I said? That paid about $500. Going an extra, 30 something days out, going to 43 days total, that 550 call pays $2,400. So basically what that means is if I went 550, I would get paid $2,500 up front today that I can do whatever with. Go on vacation, I could buy groceries, right? And it's still $60 up above the current price. Now, I want to be a little bit more conservative with AMD. I'd rather have a little bit more upside cushion. Now, remember, in the level 2 data, we said $600 was like that. It's that big resistance, right? So we're going to look closer to that $600 line. If I get paid, if I sell a call at $600, okay, this would pay $1,400 today, and I already own the shares, and that's $110 ish above the current price. So that's actually, if the stock goes to $600, I would get 11K of appreciation. Plus, I get paid $1,400 today, which that seems like a pretty good deal, actually. If I did the 580, I would get paid $800, $1,800. I'm leaning toward. I would like to be a little bit on the safer side of this trade. I get 1,400. That's about 3% between now and September. Oh, my There we go. There we are. I keep losing you guys. Okay. So that is about, yeah, 3% ish. Now I'm still kind of thinking through this. Let's check out the delta. Okay. So this is another piece of information that we like. The delta. That's probably arguably the most important Greek. Uh, Basically, there's two definitions for the delta. You see this 0.28? That means for every dollar that this underlying stock goes up or down, the contract premium should move by 28 cents. It also means that there's a 28% chance that your option contract expires like in the money, right? Or like so that I would have to sell the shares at that price. So 28, and then as you see, as we get a little higher, the delta is going to be lower because there's a less chance that it goes to 600 than it goes to 580. Okay, let me know in the comments if this is actually helping you for me to explain my thought process on just things I'm looking at as I'm doing the trade. Or let me know if it's too much. Okay. Also, don't forget to like the video if you're getting some value. Okay. So yeah, 600. So really the debate is, do I want to make 1,400 bucks today or 1,800 bucks today and limit my upside to the 580 or limit it to the 600? Now remember, if it expires anything below these strikes, then I just get the premium and move on with my life and nothing happens. I'm holding the shares already. And this is way above my cost basis. My cost basis is right around 187 bucks. Let's just say 200. If it sells at 600 bucks, that's a 200% gain on the stocks, basically. So it's really good. You never want to sell covered calls below your cost basis. Okay, so I think I am going to go probably 580. Well, it's only $300 difference. Well, there's a lot of time. Screw it. Let's do 600. Okay. Get paid about 1,400 bucks. Total credit for September 18th. Not bad, not bad. Okay, and we're going to try, there's a bid ask spread. We're going to try to get it right in the middle. Submit. Oh, come on. Okay, replace order. Continue. Okay, 1430. Let's see, 1450. So, oh. Yes. Okay, that was pretty good. Okay, that's about roughly napkin math, about 3-ish% on just the premium. Plus the appreciation, which it would have to basically break all-time highs. And you see, yeah, that was at 2,400-ish. Now it's at 3,900. That is amazing. Yeah, because after earnings, I just didn't feel like it was going to blow off the top short term. Basically, with AMD, they have their new MI450 chips coming out. They're going to start shipments in September, which is like the last month of the third quarter. So they're not going to get a full quarter of these new shipments. And then they're going to ramp it up into fourth quarter and to the new year, into 2027. And yeah, I thought their guide was just not, it just wasn't like so amazing. It just wasn't like, a lot of it was priced in. It was priced to perfection, essentially. So, the stock had a huge run up. It was priced into perfection. I still think it's going to grow and do very well. But now I'm at a point where after earnings, I feel comfortable selling some covered calls. Yeah, so we'll see what happens. But basically, literally sitting on my butt, doing nothing, I made $1,400, like literally for a trade that I'm either going to either make money or I'm going to sell the shares higher and make money. If the stock could go down, but I'm holding it anyway, and they're growing, like data centers growing like 100% year over year. They're growing a lot. They are growing. They're very profitable. We're in the beginning of the AI revolution. I don't think it's going to go down a whole lot. It can. It's a semiconductor. It definitely can go down. Anything can go down. Um, yeah, anything can go down. Short term, right? Right. We just have to make calculated decisions, calculated bets. But I don't think it's going to drop a whole lot. It obviously could if the market downturns, but I'm just going to place my bets with my conviction, and I'm very bullish on AMD. So, but yeah, we'll see what happens. So, um, yeah, and income helps. So, trying to just balance growing the portfolio and then also generating income. Um, okay, that's pretty much it. Let me know if that helped you out. We'll see you in the next video.